The best way to convince someone about Pakistan is bringing him to the country and showing him that it's completely different from what he thinks it is and what media told him on anything. Yeah. First, and that's maybe important to state here, we started more informally. We started as an angel syndicate of like-minded people, Rabil, myself and others. So we pooled together an amount of money and invested in companies. So our first investments have been made more out of this structure. You are for sure aware of Patari and ProCheck. Those investments have been done under this framework. PR and positioning just worked out quite well. We received a lot of inbound requests, what we call pipelines, so a lot of founders and teams came to us and wanted to understand whether we would potentially invest in them. So we saw that this is greater and larger than what we can do on our own. And at that point we started to think about raising a fund and institutionalize ourselves. So what is our pitch? Our pitch is quite easy. Pakistan is a market that in the end is very large because it's sixth or fifth largest population, increasing or improving security situation, a large talent pool, a rapidly increasing smartphone penetration, internet penetration, which is critical for certain business models. You have good education, you have a supporting political agenda, and you have a team that is locally on the ground. It's us that understands the market, that is rooted in the country, and that understands both local habits and how to do business, and have a local network and access to deal flow, as well as understanding and speaking international language. The mandate of Sarmayacar, of the fund, is pretty simple. We need a Pakistani context in the sense of the founders are Pakistani and or it's headquartered here and or the majority of employees are in the country, or Pakistan is one of the top revenue contributors. So we have a bit of flexibility. In terms of businesses, it's also quite simple. Tech and tech-enabled is something that we do. So scalable business model where tech is somehow involved. And in terms of team, the more comprehensive, the better. The more relevant track record, the better. But most importantly, it is really about motivation and them having done their homework. For example, is a serial entrepreneur. It's one of the view cases, which is already a positive, but also in terms of what they are doing, the traction they have, the logistics play, the ambitions they have, it makes sense because it solves a problem and it has a product where there's a product market fit, speaking in terms of investor wording. Yeah? What you need to make sure as an investor is that once you know that the company needs more capital, and capital that also likely goes beyond what you can provide, that you make sure that, that you will not have any obstacles there. We have different dimensions that we look at. First, what has been already, what is there, yeah, in terms of traction, what has been invested, do they have meaningful revenues, do they have growth? This is an important component. The second one is how does the cap table look like at the moment? So do founders own everything? Are there already investors on board? We also try to take a view on how much capital is needed in the future to grow the company to a level where we would either say it's steady state, where it doesn't require additional capital to be a standalone viable, or to be able to potentially exit it. I think it's just a new asset class that local investors, and I obviously don't want to generalize it because it's just not true, but if you come from a different business perspective and a different history, you need to understand what the differences are in terms of providing venture capital versus providing more traditional capital to businesses. One of the critical points for an ecosystem is, and this question always comes, have there already been exits? Yeah? And we saw the first exits. Yeah? We saw it with the RAS, we saw Ant Financial entering the country. So we also saw a smaller exits. So this is happening. Yeah? In particular, the 100 million plus exits is something where investors say, okay, good. That is something where there is a certain tick the box. I think Pakistan is an immature ecosystem. It's very early days, which means that different players in the ecosystem needs to learn their lesson and needs to understand that this is a different asset class than, let's say, private equity or traditional way of doing business. It is currently a period where capital is easily available, and therefore the pools of capital that have been aggregated behind venture capital funds per se is very high. So there is more a topic in terms of how to deploy it properly than ever before, I would say. On the other hand, and that's maybe a trend that I start to see coming out of Silicon Valley and coming also more into Europe, is that venture capitalists rather move in a bit later at higher valuations, but at the same time deploy more money because they have the money anyhow. I think what is important, and that's the reason why I think tech is also important, you don't need a lot of capital to build successful business models. What I would also add is I have a lot of discussions, dialogues with international investors, and more are interested in what's happening in Pakistan.